Welcome to another day in the Matrix. I wanted to start this video out by thanking all of you who've joined the channel. Looks like we've added a couple new subscribers over the weekend. Almost 100 added just with this one video that I did about XRP and XLM, doing a little bit of a decode. This video did really well. I'm really glad you guys enjoyed it. It was kind of a shot in the dark because I was just going over some of the more obvious things when you type in XRP, XLM, Stellar, Ripple, just basic stuff. So it was really great to see how everyone responded to that. And also, this previous video that I did, I'm really happy to see everyone respond so positively to that as well, because although it got way less views, it was pretty great to see thumbs up, because this whole video sounded very negative, and I'm glad because it shows me that I have the right people that are attracted to this channel. Typically when you talk about bearish sentiment or bearish concepts or crashes, those ideas make people very upset because typically everyone just thinks this is going to go up and up and up forever. And conscious people are aware that there's cycles. Everything operates in cycles. And it's very important to see that, because if you just believe this will go up and up and up forever, you'll be like one of those people in 2017 who thought that Bitcoin was just going to go straight to 100,000 or something. And you bought in at 15,000 and it went up to 19,000, and then you sat on it and then sold when it came down all the way to 5,000. We're trying to prevent that kind of stuff from happening this bull market by talking about these extra additions to our analysis, such as Gematria, however you want to pronounce it, and numerology, and perhaps even some basic astrology. So I did have a lot of, how do I say this? I had a lot of interesting questions in that previous video, and a lot of the time what I'm seeing here with the way that people discuss, let me increase the brightness here. One of the things that I'm hearing people bring up to me quite often is this idea of the good and the bad within XRP, Bitcoin, Ethereum. People just like to assume that one thing is good or one thing is bad. And what people, I think, are missing out here is that this whole system that involves money is controlled. It is not, there's not one aspect of it that isn't. Now, it can be controlled on the higher levels, or it could be controlled on the lower levels. For instance, there's a lot of these low cap crypto gems that people are so obsessed with that they jump up 100 spots in market cap, and people make generous profits. But that's great and all. That's really fantastic. I'm always happy when I hear people making money. But the thing that's very important to understand here is, wouldn't that also be controlled on some level? It doesn't have to necessarily be the Vatican or the City of London. It's not that these things are controlled directly by the Rothschilds. It's that there's different levels to this shit, and that people need to be able to see the bigger picture. It's so easy to just point your finger at the Jesuits and say they've done everything. They've destroyed our life, or whatever complaint you want to make. Or you could say that Bill Gates is killing everyone with his vaccines. You could do that all you want. But what are you going to do about it? So what if Bitcoin's controlled? So what if the Jesuits operate Bitcoin? Who cares? Make your money. Get in and get out. Stop blaming. Just open up your eyes. I got a comment from somebody discussing this idea that XRP being pegged to all these currencies and taking over and all this stuff, and how people need to wake up and learn that that's not a good thing. I actually agree. I know people in the XRP army are not going to be happy about that. And also, I'll let everyone know, XRP is my second biggest holding. So this isn't biased whatsoever to have any negative sentiment about it. It's just I was buying in XRP all around this this range right here, this summertime, and my average buy-in is around 18 cents, I think. I have them all written on my chart. Yeah, so right here, my average buy-in is less than 18 cents. It's 0.174. So I'm like caught at the wick of that dump that happened at the end of the year. Um, and I bought more that day. So, anyways, I mean, the way I'm looking at it is I know that these pumps up are happening from Ripple. I know that these dumps down are happening from Ripple. I know that this isn't retail. This is a shakeout. And I don't want to really get too deep into that because this video I wanted to actually do some analysis and I wanted to get into the charts. But I did just want to add into that this idea that everyone's just doing their job. Ripple's doing their job. The people who are the whales of Bitcoin, are just doing their job. The one thing that I will say that I enjoy about Bitcoin over all the other cryptos is right now it's at an all-time high of e-liquid supply. I think it's something like 74% of all the supply is currently locked up on hardware wallets, cold storage. Now, if three-fourths of the supply is kind of taken out of the picture, and we still have maybe, I forgot how many Bitcoin are left to be mined, something like 2 million more, 2 or 3 million more. And then we have a halving coming up exactly 3 years from today, basically. This is scarce. This is very scarce. So if people like keep going down the Michael Saylor playbook of just taking their company's treasury and putting a percentage in Bitcoin, it's going to make it continue to hyperinflate. Now, again, it doesn't necessarily take away from the fact that there still is an opportunity for a bear market or there still is an opportunity for flash crashes. That's totally in the cards because even though Michael Saylor has a shit ton of Bitcoin, there's still bigger whales than him. And if he's not keeping that on exchanges, some of these whales, when they do these 50x shorts and they coordinate together to do these 50x shorts with 30 Bitcoin, 40 Bitcoin at one time, you get these massive liquidation candles on especially certain exchanges. So these things happen regardless of Elon Musk or any of these people buying Bitcoin. But anyways, this chart is something that I wanted to discuss a little bit with you guys. It's from a couple of videos ago. I don't remember the exact video. I should probably start doing that where I go back into my videos and show you guys moments of when I discuss this. But anyways, I trust that you know that I'm not making this shit up because it's all, verified and saved on my YouTube channel. But right around before this even all occurred, I drew this line, just like I had this line here. And I was showing how there's two very important factors to what I see coming up in these fractals. For one, it's coming up to this golden pocket, okay? And number two is this trend line. So let's extend this trend line out. You could see that it's a very solid trend line. It's riding up this perfectly. I'm going to go over here, go to settings, and extend right. And you see what's going on here? If I lighten up this fractal pattern, it might help. Okay, you see what's going on here? So this line just straight up bumped into this, and then we had our rejection point. Now, I'm not saying that this trend line is absolute gospel. I'm just saying that it's giving me ideas now. It's giving me some thoughts, okay? So for the rest of this video, I'm going to remove that. I just wanted to show you that and how we could use this trend line, which is obviously a really good trend line. As you see, it's riding up perfectly, even with this huge candle riding up. And then when it comes down, it danced here for a while. If you go to the 4-hour candles, if you go to the 2-hour candles, it danced around that range for a while. Then when it dumped down to the bottom and it came up, it basically almost hit it again. And now today we're in a very critical area, and that's why I wanted to make a video today discussing this. So you see where this arrow is pointing. It's pointing to the rejection of this 786. Okay, so in crypto, because it's very volatile, you could have what's called a dead cat bounce scenario go past the 0.5 fib and go all the way up to the 786. In this scenario, it even went a little bit higher. This was extremely bullish, okay? Because if you look at the dump from here to here and you look at the dump from here to here, I mean, it's huge, but these candles were very big. I mean, this candle alone on this one day was a 17% drop. Of course, it got bought back up pretty nicely, but I'm just saying a 17% drop in a single day shows you that this move up happened probably a little too quickly. It could have used more consolidation time before moving up. Now, what's happening here that's kind of weird is we're getting pumps up pretty fast, even faster than we imagined, because we were anticipating sometime near the end of the month we'll start seeing, moves up. But what I saw this morning that was really interesting was coming up to this 786 and immediately getting slapped. So what's potential here? The potential here is another retest of at least the 236, because you can see right here, this 236 line is getting really nice support. Come down here as support, and then it just broke below it for like a couple of days, literally three days, and within those 3 days it was not wanting to come down. So then this big green candle flipped us as what would be called a support on the 236 again. So I'm sure if I was to bring up the VPVR, that's about the area that you're gonna see the excuse me, I don't know why it's not showing up. Oh, yeah, perfect. Okay, you see this red line? That's the point of control of the VPVR indicator. And you see where it is? It's perfectly at that level, right? Like I said. So there's another opportunity for this to fail and then come down all the way to the 236 again, get a retest on the 236, which would also be confluent with the point of control. Okay. Now let's look at some indicators to just see what else would be confluent with this area right here. If I move it up, we could see we got our red point of control. Let me add in some moving averages. I'll remove, that's enough. So also what we got is this 34 moving average. You see the 34, how it didn't close a daily below the 34? And you see how here we only got 1, 2 closures below the 34 on the daily? Closing below the 34 is pretty much one of the best buying or longing opportunities in a bull run. I'll just say it right there. That's like a free giveaway for this YouTube video for any trader or anyone who's looking to simplify things. You don't need all of these moving averages. I like all of them because I'm a little more advanced now, and I've color coded them in a way that is easy for me to remember. I don't need to go back and look. I know my yellow is my 8, my blue is my 13, my orange is my 21, my fuchsia or whatever color this is my 34, and then my white is my 55. Green is my 200. So also another thing to note is this white 55 is approaching pretty much the bottom wick that we hit on the 28th. So what's that telling me? There's confluence. We can have an absolute death candle in a couple of days to tap on this 55. And that's basically what happened back here. You see that the first day we closed below the 34, we got bought back up and then rode on it before we had another dip down to hit that 34. Sorry, to hit that 55. You know what that would do then? That would put me in a position where I'm getting ready to draw another one of these white lines. So if we extend this white line out, I'm not saying this will work like this, but let's just say. You see where this fractal, I know it's lightened now, so I'll add some extra color to it, but let's just add a little color to it. And remember, we ran into this line back here when I extended this white line. I'll take off all these indicators now so I don't confuse everyone. That's much easier to see, right? So with this line, when I extended it, right up here, we bashed into that trend line as I extended it. So right here, I'm taking the next fractal, I'm extending it, and you see where we would be hitting and riding up. Sometime around early April, we'd be hitting the 77,000. So this is why I've thought about this. Another thing, one other thing. Society of Jesus, 79. So we have the 79th day of the year being, let's see, March 21st. Now remember, 21st day is always important. Always important. Okay? We have right here, February 21st was when we hit the all-time high, the current all-time high. January 21st is when we retested a bottom. We had a huge negative 13% red candle. That would have been the perfect place to enter a long. So this could go either way. I'm not trying to say that we could basically have a moment where we trade sideways all the way to the 21st and then have an absolute dump. We don't know. Just that date is very important because I see two things that matter. One is the 72nd day. This is just using a little bit of Gematria, which we're approaching the 72nd day, which is March 14th. So March 14th and 72 matters because we have Bitcoin, 72, pure cipher. We have money, 72, pure cipher. So 72 is going to matter. So I believe March 14th to March 22nd is going to be important. Now, also, another thing to remember is March 13th was when the market crashed last year. So my previous video was just discussing basically, like, do you have the nerves to stand a huge correction? It wasn't me saying there will be a huge correction, and I'm glad that most of you understood that, judging by the reaction to that video. So again, let's think about this for a moment, just to bring it all together on this YouTube video. I'm gonna be making a mastermind video later for my private clients. Also, another thing, I'd appreciate if you guys go over to my channel and give it a subscribe if you haven't yet. Subscribe and let me know whatever questions you have, so keep this content rolling. And I also have a mastermind. Mastermind program includes lifetime access to a private website and also private channel that's run on a website. And then also it will include up to 3 months of consultation and mentoring on technical analysis and anything that goes in terms of markets. So one thing that's really interesting is this DXY dollar index. We're just going to quickly scan through the traditional market just to get an idea of what's going on here. So we've been tracking this for a long time, basically since about right here, and we've watched this dump. And we know this dump doesn't just come in like one fall down. You know, it's going to take time. It's going to have consolidation ranges. So right here, September 25th, and remember I said this, is right now. Just basic fractal analysis. This moment right here is this moment right here. So now what we can do just to have fun is we could bring up our bars pattern, go from the high all the way down to the low, and then we can scoot this on over here to see what this might look like and how perfect this would look. Okay, so this would be a failure of this white trend line because we've been broken out and then we came up to it as a resistance, broke down, but then we had, this happens every time by the way. Before they announce stimulus, these lizards pump up the dollar so that they can basically get dollars on the side to buy back the dip, and then they push the market up once that stimulus starts coming out. The dump down here was because they baked it into the price. They knew that this $1.9 trillion stimulus would come out. They know it. That's why when Trump was discussing this idea of a $2,000 stimulus, everyone was giving him shit about it. But then they come out with a $600 one, and then Biden immediately becomes president, and they're talking about a $1,400 check. It's the same fucking price. But you see how they get away with the sentiment by manipulating the numbers? And I'll also make a video about the stimulus and the date it passed and all that shit too, because that's all gematria, obviously. But anyways, so what we can see here is we're probably going to get a dump down moving into the stimulus being printed, and then, I mean the stimulus checks, because this is all about a manipulation versus people and corporations and politics and all that. Then we're going to get this weird, probably, you know, pump back up to the 236. And this is a macro fib channel, by the way. This goes all the way back to the March highs. Oh, no, sorry. This is even further back. This is very macro, these fibs. Yeah, it goes all the way back to the 2016 highs, which we basically had a double top. We have the March 16th, and then we had the February or March timeframe where the Corona dump started to happen, where basically the stock market, everyone moved their money into cash to buy that dip. And then what we could see here is we're probably going to enter sometime in the summer and hit new lows. And lows being from the 2018 dip down. And this fractal would almost be a repeat from top to bottom, if you set it from top to bottom, of exactly what's going on. I mean, we could try it just for fun. Let me go to bars pattern. I know this video is getting kind of long, but I wanted to give you guys some value so you can see we're not messing around here. Okay, look at that. Look at that. Literally. 87.68 versus 86.9. It's basically the same. Okay, so that's probably exactly what's going to happen. These consolidation ranges and using the fibs on that macro fib are getting more and more, how do you say it, predictable. So if we break down below this, which I would anticipate we're naturally gonna before the end of this week, or you never know, we could pump up a little more, maybe get rejected on this trend line and then come down. But regardless, I'm pretty sure the trajectory of this DXY is down, breaking below 89 and heading down to the low 80s, most likely before the summertime. And then once they start to quote unquote reopen stuff, that's going to get really messy. So we'll see. But anyways, so we went over that. Okay, so the 10-year yield is another thing I've been keeping an eye on. It's been following this trend line, and then it just started going parabolic. So when yields go parabolic, the Federal Reserve needs to step in to control it, and that would be called yield curve control. They're talking about it a lot. They're saying they're not doing it, but it's absolute nonsense. They are doing it. And they'll continue to do it because that's just how they manipulate everything. They're probably going to sell or buy short-term bonds and sell long-term bonds, or vice versa. I forgot exactly the mechanism. It's called Operation Twist. For anyone who's interested, go research that. And also anyone who's sitting out there spewing this idea that there's no inflation, like Steve Van Meter. I don't like to talk negatively about people, but literally stop listening to that guy. He's out of his mind. Go look at your gas prices and go look at your food prices and tell me that there's no inflation. Absolutely silly. Okay, so yesterday the Dow Jones hit an all-time high. So this new all-time high mixed with today's potentially new all-time high is giving steam to Bitcoin. But why yesterday was Bitcoin lagging all the way up until daily close? I don't know if you guys remember, but yesterday Bitcoin was just consolidating, and it didn't want to break onto new highs. And then once that stock market closed, you see right here, 6 p.m., it just shot up, right? Because it was getting held down by the NASDAQ, which yesterday was having a really shit day. So these tech stocks are giving back. And again, people calling for a market crash, and I'm telling you, it's the year of the ox. It's the year of the bull. This correction right down here was more violent, this double bottom scenario, and that's probably what's going to happen again with the NASDAQ. It's going to start to naturally move back up, maybe halfway to right here, to this area. You could kind of tell because we have some traction over here, and then this is where the pump began, and then you have right here, you have resistance before it came down. So it's probably going to come up to here, do something like this, and then W down, have a higher low, right? And then it's going to W breakout, just like it did over here. That's most likely what's going to happen. Okay. Or, I mean, even better it would be something like this, where it has an actual textbook W breakout where it moves up to this uh, resistance area, comes back down, gets a new higher low, comes up, and then when it breaks the neckline right here, pumps a little, and then comes down to confirm the neckline and then bounces. Something like that would be ultra bullish. So we'll have to see. I don't think the stock market's going to stop going on new parabolic all-time highs until there's a retail housing crisis or a credit freeze or something like that. And even then, I think they have the mechanisms to keep this market propped up for a pretty long time. Um, so yeah, we're basically just going to sit back and see how these next couple of days go, because as we see on this previous fractal, we'll just go over it one more time before we get out of this video. With this previous fractal, we had a huge failure of the 786. Today, it's our first time currently being in the 786 range. Will we fail? Will tomorrow open up and be a massive red day? We'll see. The one thing that's making me feel like we won't, let me show you on my indicators. Don't worry about this. We're just going to look at the MACD. So for one, the RSI right now is sitting around 65, which means it does have room to go. Bitcoin can get to 80, 85 pretty comfortably. Excuse me. So we know we have room to the upside, right? Based on RSI, we could say yes, we do have room to the upside. What would confirm room to the upside is a daily closure above the 786. If we close above the 786 and then we have a break of new all-time highs, preferably a back test of the 786 or a back test of the previous high at 58,400, that would mean we're going to start heading up to new highs. And then we look for the 80 on RSI, potentially as high as the 80 or the 90 on RSI. But one other thing I'm seeing is a MACD cross is about to happen. Okay. When MACD crossed last time on February 3rd, the price went from sitting around 35,000 to all the way up at 58,000. So we could just straight move up from here. I would not be surprised. We just have to wait and see how that goes. It's also not completely impossible for the cross to have a moment like this, where we get a cross and then we have even more consolidation before a nice blast off. Somebody was sharing this theory with me that it's potentially possible for like 4 or 5 of these huge patterns to form. Some theory. I don't know too much about it yet, but like I've told you guys before, I think Bitcoin will go to 117,000 most likely on the 117th day of the year, which is going to be, and again, I say most likely. I'm not trying to say that it will. So by April 28th, we're probably going to see $117,000 Bitcoin, and then we might even enter a bear market from there. I don't know. We'll wait till that day comes. But for now, if you guys have any questions, enjoy the rest of your day in the Matrix. Feel free to subscribe. Write some comments down below if you have any questions. I'll be making a new video in a couple days. Peace.